The BSE rally is over 10% as the NSE defers plans to move the expiry day from Thursday to Monday. This after the market regulator SEBI recommends limiting expiry days to either Tuesday or Thursday for all equity derivatives.
Force motor surges in trade. It's up close on 3% after the Defence Ministry approves an order for light vehicles worth around 2,500 crore rupees.
NHPC climbs nearly 5% after CLSA maintains its high conviction outperform rating on the stock with a target of 117 rupees. Brokerage remains confident that NHPC is set to commission its hydroelectric power project by the first week of April.
Shree Cement climbs 2% after Nomura upgrades the stock to buy and raises the target price to 4,000 rupees per share. They cite market share gains, better volumes and higher prices.
Hindu Air Homes surges around 8% after the board approves a demerger which will create two listed separate entities holding the consumer products and the building product businesses of the company.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. It's a Friday morning and as you could see, all the indices that were trading in the red, the Nifty as well as the Sensex, they're moved into the green. The breadth of the market is good. Well, it's a good start to trade, Mangalam.
It's a good start to trade, good start to the April series as well. The market's now moving higher as we speak. From the lows of the morning, we'd seen a bit of an up move and now looks like a bit of a lift-off which is taking place, and it's led by the Nifty Bank, which is up 0.4%, but not too far away are some of the Nifty stocks as well. You keep an eye out on something like, Hero Motocorp, which has moved higher, seeing some buying. Apollo Hospitals doing well as well. Grasim, Adani Ports, all the FMCG stocks as well, taking, seeing some gains or taking the Nifty higher. So we have HUL, which is up around 2.2% as well, the FMCG index at the high point of trade. So a bunch of stocks doing well, broader markets doing better as well. So we'll keep an eye on the market as we progress into this new series. But before we do that, let's get in a corporate conversation. We have Kamal Singhal, who is the MD and CEO of Arvind Smart Spaces, who joins in to discuss the business more in detail. Remember, the company had sold 200 plots with a booking value of over 180 crores at the launch of Arvind The Park in Bengaluru itself. Kamal, thank you so much for joining in. I just wanted to know, from the last time you joined in to now, what have been the bookings? Because in this quarter, you were expecting, to end this year with the bookings of almost 14 to 1500 crores. With this 180 crores, where does your overall bookings for this year stand at so far? And how far are you from the 14 to 1500 crore target?
Yeah, good morning. As you said, we just launched a beautiful project in Bangalore and the response there has been absolutely great. We sold more than 200 plots there at the time of launch. Till last quarter, that is first 9 months of this year, we've sold inventory worth 890 crores. Last year, we sold in all 1100 crores of fresh sales as a company. So we clocked growth of around 15% there. Bare minimum, we should be able to achieve this growth for the year as a whole, because as we discussed last time as well, there are a couple of launches which might slip into Q1 of next year, and hence general growth trend of 25 to 30% might be more like 15 to 20% this year. But having said, this is just a slip of a quarter, and hence this should get pent up sales coming in the first quarter of next year.
So this year you'll end with a number of close around 1200 crores of bookings?
Should be more than 1200. So we are still hoping that we should be able to clock a growth of around 15 to 20%. Yes.
All right, 15 to 20% over last year would take you around 1300 to 1350 odd crores as well. But you said that a lot of it would slip into the next year, and so it's not, business which is cancelled, but it's business which is delayed into the next year. So to that extent, what is the kind of bookings that you are expecting for next year? Because typically you target 25 to 30%. Now with this additional, business going into next year, could we see a higher number next year? What's the FY26 bookings target?
Yeah, absolutely right. You hit the nail on the head there. If we were to lose 10% sales this year because of the slippage, that should get added in the next year, because as such, other projects and everything else is on track. VD is on track, launch plan otherwise is on track. And hence, if we generally would expect a 25 to 30% growth in a year, that's what we have been doing for the last few years. Next year should be better than that. So we should look at more like a 35% and more kind of growth in fresh sales because of this delay in this year.
All right, so you'll be closer to around 1900 crores of bookings in the next year. Would that be a rough number?
Maybe, 35% of growth or maybe 1,250, 1,300 crores this year. That's the number it will get added. Yeah.
Okay, all right. A couple of more questions then. I recall that you all were planning a QIP of close to around 400 crores. And I think the promoter entity as well wanted to participate with regard to a share issue. What is the update on that front? Is that still on the cards or is it deferred?
Yeah, that enabling resolution is there in place. We've got 1 year time to hit the market and mobilize that. That plan is absolutely on track. And at an appropriate time, we'll be hitting and getting this money for sure. And as you very rightly said, promoters are backing this and they will be participating in a significant way in this round as well.
So a QIP of around 400 crores and a promoter infusion of close to around 150 crores. Should that be the rough number we'll work with?
So, overall size is supposed to be 400 crores and a significant portion of that is supposed to be contributed by promoters for sure. We'll come out with the exact numbers as we progress, but yeah, broadly the numbers are in place.
Right. Got it. Okay, so that's out of the way then. Because I wanted to understand if that was postponed, would it derail your development plans? But that's not the case. It's going to be coming about some part later this year. Got it. What about, the stock market has been jittery. You have a fair bit of exposure to Ahmedabad and a lot of trading action from there. Since the market is jittery, have you seen some softness in your sales? Or, is it as good as it was, say, 6-8 months ago?
So we have been seeing quite a healthy response to all our launches. This has happened to the last launch as well. Ahmedabad has been absolutely great for us. By the way, apart from Ahmedabad, our company does almost like 50% of business from a city like Bangalore. That is very strong. It's moving, doing pretty good for us consistently. And hence we see that the macro driver and drivers are all in place. There'll be some small fluctuations coming here and there, short-term ones. But generally the housing demand and on ground feelers that we get are pretty strong and good.
What is your launch pipeline for next year? Because this year you said that some of the launches have been delayed. Earlier you were working with a target of 2,500 to 3,000 crores next year. If some slips into next year, then what do you end this year with the number of launches that you have? And what's your next year target?
So, very rightly said once again, if you were to look at these 2 years as a block, idea is to launch at least 4,000 to 4,000 crore rupees of inventory. Putting together these 2 years in one block, we should be able to achieve that. So the numbers which we are slipping this year, obviously will get added next year. So both in terms of fresh sales and the launches, this will add up to what we expected otherwise for the 2 years put together.
All right, just a final question before we let you go. You wanted to end this year with 1,000 crore collection. Where do you stand on that target? What's your target for next year? And with the QIP planned of close to around 400 crore rupees, like you pointed out, you said that you have around 800 crores of free cash on your books. And, you were looking to fund any sort of expansion via 300-400 crore of debt as well. So if you're going ahead with the QIP, then maybe you might not need the debt. Or would you still consider debt raising along with the QIP?
Sure. So collections are very healthy. We've already seen a growth of more than 10% in collection in the first 9 months, and we collected 750 crores. So we're inching closer towards 1,000 crores, as you said. So broadly on track, plus minus a little bit here and there. On the launches, as you said, if you could repeat the second part of your question, please.
No, the second part was that you have 800 crore of cash on your books. You had earlier said that you will look to target around 300 to 400 crore worth debt raising. But now that you're going ahead and doing a QIP of 300-400 crores, should we assume that there won't be any debt raising and the capex would be funded by the 300-400 crore QIP that you're raising?
So the capital strategy has all the three components which are active. QIP is one of them. Debt, the company is broadly at a net debt level, debt free at this point, and also the internal accruals are pretty healthy. So all these three things put together is the plan that we want to invest, and that adds up to around 1,000 to 1,200 crores. So all these three components put together are giving us around 1,000 crore rupees of immediate investments in the coming year.
All right, take that point. Thank you so much for joining in, and wish to speak to you post your fourth quarter numbers as well once you have better clarity on how the numbers for FY25 had been and outlook for FY26 as well, Kamal. Thank you for joining in. With that, let's move on and let's get you some visuals on our screen. It's the market editor Madhu Kela, who's the founder of MK Ventures. He's just entering the CNBC-TV18 studio because we have him for an exclusive conversation coming up at 11 itself, not too far away from now. That's Madhu Kela getting ready to be the market editor for CNBC-TV18. In just 15 minutes from now, you will hear from him. With that, we'll take a short break, come back on the other side. Vinay Rajani of the HDFC Securities We join in for a quick technical check on the market. Welcome back. You're watching us here on Chartbusters. A bunch of stocks doing well. The Nifty is now up 50 points. Reliance is the one which is picking pace right now at the high point of trade, so we'll keep an eye out on that counter. The heavyweight moves takes the Nifty along with it. The Nifty is recovered from the lows and now moving an inch higher, largely on account of the recovery that we've seen on Reliance itself. Vinay Rajani of HDFC Securities joins in for a quick technical check on the market. Vinay, where do you see we're going from here?
Good morning. Yeah, so after rising 1900 points, Nifty corrected 450 points and now again resuming its uptrend. So recently Nifty has found support on its 100 and 200 days exponential average, which is currently placed at 23,400. So nice setup is there. I think Nifty is headed higher. The ultimate target for the Nifty we are seeing is targeting is the 24,125. 24,125 happens to be the 50% retracement of the entire fall which we saw from the all-time high to the recent swing low of 21,964. So 24,125 should be the target. Support is seen at 23,400. And after 5 consecutive negative expiries, we have seen a positive expiry yesterday, and that has also formed a bullish engulfing pattern. So 80% of the stocks in the derivative side have seen either short covering or long build-up. So that gives us the confidence that the rally should continue, and the immediate target for the Nifty is seen at 24,125.
Okay, all right. What about individual stocks?
Yeah, so basically cements have been doing good. So Ramco cement is looking attractive. It has started performing well, and yesterday also it performed very well. Today follow buying is going on. So around 908 one can go long. 880 should be the trading stop loss on the higher side. 945 should be the target. The second pick I would take is the Hindustan Unilever. So FMCG sector has started performing after a long time. So 2285 is the current level. That can be the entry level. 2200 should be the stop loss in the trading long position. On the higher side, I'm expecting a target of 2450 in Hindustan Unilever.
All right, take that point. Thank you so much, Vinay, for joining in. With that, we'll slip into a short break. As we do that, here's a programming note. The future belongs to Bharat, and the Rising Bharat Summit 2025 is here, where the visionaries show us how to lead it. Get inspired by Arvind Srinivas, who's the co-founder and CEO of Perplexity, the AI disruptor redefining how the world reaches or searches for knowledge. Gain transformative insights from Vivek Wadhwa, who's the CEO of Vionics Biosciences, acclaimed academic, entrepreneur and author, on how India can lead the next wave of breakthroughs in AI, science and innovation. Join us at Bharat Mandapam, New Delhi on April 8th and 9th for a powerful exchange of ideas shaping the nation's next leap. Book your passes now.
Welcome back. The broader markets are something that you should keep an eye out on. IFB Industries, we had highlighted this stock, earlier this week. In the last few trading sessions, it's seen some very, very good delivery-based buying. And as we speak, that's moved to the high point of the day. Keep in mind, from the highs, the stock nearly halved. And post that massive block that we saw, in the last week or so, the stock has been perking up. So in the last few days, in fact, it's seen a good run. I think it's up close to 15 to 20% or thereabouts. The other one is Welspun Specialty Steel. Out there, the promoter entity participated to a higher magnitude in the rights issue. And because of that, in fact, the stake has gone up a little bit. Earlier this morning, the stock was at lower circuit because those that taken in the rights issue, well, they were trying to book some profits in the last few days. So yes, it was at lower circuit even the previous day because those right shares got credited, which was at around 26 rupees. But for the time being, it seems that, that lower circuit has got released and there is some buying interest, which explains why the stock has come off the low point of the day.
All right, Nigel, with that, what we'll do is take a short break. And as we do that, here's some good news for our viewers. The CNBC-TV18 app, India's business news leader, is just now a click away. It's the all-new app where you get instant access to breaking news, analysis, in-depth article, and all the financial world updates at your fingertips. You can download the app from the CNBC-TV18. The CNBC-TV18 app can be downloaded from the Apple Store or Google Play Store. You can just scan the QR code, which will redirect you to a link that takes you to the app.